Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday. It is April the 11th, 2012. We're going to be looking at the U.S. markets today, all of them. But before we do, I wanted to kind of teach you guys something right quick on the oil index chart here. For those of you who don't already know this, whenever you're looking at a market, there's a couple of questions you got to ask yourself. Which direction is the market going? If you're in an uptrend or a downtrend, in this case here, you can see that we were in an uptrend. So whenever you get a sell-off from an uptrend like that, you want to let it fall until you get a hammer candlestick formation. At that point, you feel a lot more confident that we're starting to see an opportunity to be a buyer here, because two things are in play. Number one, you have the fact that you are in an uptrend, and that means you're looking for buy opportunities. And number two, you're getting a hammer candlestick formation telling you that you are seeing some support here. So the very next day, if you get a higher high than this candlestick, you buy. And that's exactly what you had the opportunity to do right there. You can make this money to the upside here. The sell-off again falls until we get a hammer candlestick formation. The very next day, if you get a higher high, you could be a buyer there. Stops it right here. And this game just continues, and you continue to play this as long as it will let you do that. Hammer candlestick formation, higher series of high, you'd be a buyer like we were right here. Then move to the upside, you advance the stop, and sooner or later you will get to a situation where the uptrend will end. And basically you will try to test the previous high and you will fail at it. At that point, you'll get a series of lower highs, and then you'll start to break down. We got stopped out back here, and she falls down here and begins to break down, making a series of lower lows. At this point, you're in a downtrend, and it becomes that much riskier to try to buy the dips. Okay, is what people talk about. When you're buying the dips, you want to be doing it in an uptrend. Okay, when you're selling off like this, you want to be super cautious and not buy unless you feel real confident that you found a bottom, and that's a very difficult thing to do. The odds are stacked against you when you're trying to buy a downtrend. So it's important that you guys recognize that. All right. So right now we're looking at this oil index. You can see she's in an overall downtrend. Back during this day right here, let me clean that up so you can see this better. Back during that down day right here, we looked at that and said there's not a hammer candlestick. I don't want to mess with it. The very next day we get a jump back to the upside. Again, I say I'm going to pass on it because it's probably not a real bottom because there's no hammer candlestick. The next day she's up again, and all she's actually doing is jumping up here to test this neckline to see if you're finding resistance there. Before it was support, then it breaks through it and turns into resistance. That was a shorting opportunity right there. So she sells off again. Now at this point she forms a hammer. At that point I say, okay, this has been a major move to the downside here. It's got a hammer candlestick formation. I'm willing to take the chance on the long side. You notice it's a black arrow indicating that if the next day was higher than this day here, if it had any activity at that point, 1 penny higher, I'd be a buyer. So that gave you the opportunity to be a buyer. She advanced for a couple of days. You could have advanced your stop loss limit. We advanced so there was no risk on the trade. She advances a little bit, fails to break out, so she continues the downtrend. And that's exactly what happens here. Now, you now know how to trade this trend. Okay? You're in a downtrend. You know never to try to buy it unless you get a hammer candlestick formation, because you need as much of the odds stacked in your favor as possible just to make money on a downtrend trying to buy them. Okay? Now let's go look at the U.S. markets. Okay, here we are looking at the Russell 2000 Small Cap Index. We'll start there today, and you can see that we've got an uptrend. That, well, back here we had a little pullback, hammer candlestick formation. We had a higher series of highs than we had over here, so we could say, okay, let's be a buyer of this. You could make a little money to the upside. She pulls back down. You get a higher series of highs, and candlestick formation there is a hammer candlestick, so you can be a buyer there. But you'll notice this time around she comes up and she fails to break out. So then she breaks down, moves lower low, right? Here's the high point, here's the low point, here's the lower high, and now here's the lower low. Do we have a hammer candlestick formation? No. Are we in an uptrend? No. Would I be a buyer of this market? No. There's a couple different ways that this actually can play out, and I want to show them to you right quick. One of the ways could be the next day we simply sell off again. That'd probably be a short opportunity if we make new lows, so forth and so on. I'll mark the charts and take the opportunities if I see them at that point. But right now, I'm not going to be a buyer, obviously, for the reasons I've already pointed out. But that is one scenario that could happen tomorrow. We could simply sell off again. Another scenario, and one I think is more likely, would be that we can continue to press higher, like we're showing in the oil chart. It tries it for a couple of days. However, if anything less than breaking out above this line right here is going to be a series of lower highs. So you get an upside move for a couple of days and come up here to the 50-day moving average or whatever, find resistance. For whatever reason, at some point you're going to peak out, and at that point, if you start to roll over and you have a series of lower highs, I'm going to take it as a short opportunity, and a darn good one. I expect we're going to fall lower because this is not showing a hammer. Therefore, like I said, we're not actually seeing a true bottom here. So that's how I would play this. I would not be attempting to buy here, maybe get a day to the upside or two, and then try to get out and get short. And so, no, I'm not going to do all that. I'd rather take my time and wait for the right opportunities. And right now, we just don't have one. Okay, so what if I'm totally wrong and this market is actually the exact bottom, I'm just not seeing it for some reason, and she's going to take off without me? That's fine too. Here's what's going to happen. If you get this sell-off, we've already got sell-off, so you get the sell-off, and then this actual reversal here is the real bottom, and we're making a new bull market of all time. What's going to happen is this guy's going to move up here. He's going to take out the previous high. If that happens, then you'll get a series of higher highs. At that point, he'll need to sell off because he's gone too far. People can take profits. When that sell-off happens, then I'll be looking at a sell-off. I'll have a series of higher highs and higher lows, and at that time, I'll bet you I'll find a hammer candlestick formation and be able to buy that and trade the upside trend that would then be in effect. Right now, we don't have that. The S&P 500 large cap index, same overall story. I'm not going to draw it out for you because it's basically the exact same thing. Whatever we look at this, we want to say, are we in an uptrend? No, we're not. We're in a downtrend here. Actually, we've got a bit of a cattywampus market there. You've got a series of higher highs and the lower lows. That basically means sideways is the actual movement there. So you're probably going to see a move here to the upside. That's why I was talking in the earlier chart. I said it's more likely you would see a couple days to the upside. However, you're not going to see a higher series of highs. Therefore, that move to the upside is something you want to short, not something you want to be a buyer of here. At least that's how I would trade it. Some people will be a buyer of this current activity with the stop set right here. That's fine if you want to take that risk, but that's not how I play the market. I've got to see the right signals. Without the right signals, I just simply pass on them. It's that easy. The Dow Jones Industrial Average, this one is also obviously in a downtrend. We've talked about this in the past. Actually, you've got this high point here, this low point, this higher high, and this lower low. And you've got this basically going on telling you the same thing. Look for sideways activity. So the bounce here will be a short opportunity. At that point, we'll give you a series of lower highs, lower lows. The trend would be down, and you would be able to short it. The last chart we're going to look at today is the NASDAQ. You'll notice it back here. We were in a very nice uptrend. We get a sell-off. We get a hammer candlestick formation. The next day is a higher series of highs, higher series of lows. So what do? I do what I always do. I buy with the stop set right here. She advances. We make money. Everything is copacetic. Then we get up here and we say, hey, you know what? We're getting a divergence formation, long-term chart showing overbought above the RSI 70 line. We got this little bearish divergence we talked about, and we get a shooting star, which is basically the same thing you see here. It's just flipped upside down, a mirror image for you, and we start to sell off here. So I say I'm going to short that with a stop right here, calling a peak in the market. That's actually a high risk scenario because you're in an uptrend and you're trying to sell it. In this scenario, it worked out, but they don't always. It's actually stacking the odds against you. That's why we got stopped out of the Dow Jones Industrial Average, even though we called the top right, just not the exact peak in the Dow Jones, and so we didn't get to make the money on that. In any event, so that's why it's important that you trade with the trend. Looking at this market right now, we can see that we have right now in the NASDAQ, we can have this downtrend. We have this high point here, low point here, lower high here. She fails, she goes lower. And now are we getting a hammer candlestick formation? Absolutely not. We are stopped out of our short position, but the next move to the upside would simply be a short opportunity unless it can reverse the trend and take out that high, okay? What does all this hoopla actually mean? Don't buy. That's what it basically means. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. And all we ask in return, please refer a friend and share our videos online. That actually helps us more than anything else because you guys share our videos. And even if people aren't your friends, they see them. You know how that works? Okay. God bless. Take care. See you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.